Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Welcome back to the Emerging Managers Podcast. I'm Scott Kelly, your host and the founder and CEO of Black Dog Venture Partners. And today, an opportunity to speak to Ross Fubini of XYZ Venture Capital, who shared his background as a computer scientist and an engineer with experience in companies like Netscape before transitioning to venture capital with firms such as Mitch Capers Capital and Village Global, and eventually founding XYZ. XYZ Venture Capital has raised over $1.5 billion, focusing primarily on early-stage investments, often being the first check and leading the initial round of funding. The one thing I really enjoyed in our conversation, you'll hear about this, is the metaphor he uses of the surfer, the surfboard, and the wave to describe the key factors in a startup, asserting that the market, and the wave being the most critical element, or even the great execution will struggle without market movement. So you got the surfer, the wave, and then he views AI as the tide that affects all businesses, making it difficult to find defensible opportunities because so many companies are pursuing similar AI-powered services. XYZ's portfolio includes companies in public sector and the government space such as Adrill, Cape, and Apex Space, as well as enterprise software and other areas, including Sardine for anti-fraud and fast-growing medical brokerage. So he's got a well-defined, diverse portfolio. But I really want you to encourage you to listen to this whole philosophy of the surfer, the wave, and the tide. And I'll be back with my takes after our interview. Well, hello, and welcome to the Emerging Managers Podcast. I'm Scott Kelly, the founder and CEO of Black Dog Venture Partners, and your host. And I'm excited to introduce Ross Fubini, I hope I'm pronouncing that correctly, of XYZ Venture Capital. Welcome, Ross.
Thanks, Scott. Thanks for having me. I really appreciate it.
Well, Ross, I'm glad you're on today. I got a chance to look at your website. I was really intrigued by your history, that your father worked with Albert Einstein. That's pretty cool. So I'm a state college guy, so that's way beyond me. So
You and I both, where we've got greatness in our past. Perhaps it's my great grandfather worked with Einstein. Well, then my grandfather was the assistant secretary of defense under Kennedy. But I'll tell you, there's a thing in math called the regression to the mean, which means like the next instance is close to the average. We're just drifting. We're gonna, my kids are gonna touch bottom, and maybe there's a path up from there. So.
Well, if that's the case, then my kids are probably Cro-Magnon men, but but again, thanks for being on the show. Ross, before we get into XYZ, why don't you share a little about your background? Obviously, you've got a great historical background, but share about your background prior to starting XYZ.
Yeah, you bet. And so my own background is I trained as an engineer. So originally a computer scientist, and then I've had my whole career out in the San Francisco Bay Area where I live now. So for me, I worked at Netscape just after the IPO. On both the client and the server side. I worked in the .com companies. I ran a division of the security company Symantec and really did some really interesting leadership roles. I then started a company that was basically making a Facebook, but for businesses. And this is a time that was not obvious. Facebook was in its first couple million users. So much so that, we sold that business to SuccessFactors, which is the HR system that then was sold to SAP. Meanwhile, my mom was always like, why didn't you just join Facebook, dummy? So lots of mistakes, but lots of success all through the operating side. Then my experience moving over to venture, and Scott, the area that you've built so much understanding and audience for this podcast, I stumbled into it. So one of my investors in the company was a guy named Mitch Capor. Mitch was the founder of Lotus 1-2-3. It's like Mitch, Steve Jobs, Bill Gates, like that's starting software. And Mitch also was, now I have boyish good looks, but I'm like 1,000. So I remember back then, there were no angel investors. There were no seed funds. This is not a category. And Mitch was doing investment at this point. And he and Ron Conway, people like that were angel investing. It was new and weird. So I came in to work with him at Capor Capital, which was just tremendous fun. Mitch had just done Uber. I did Twilio, Optimizely, Omada Health, blah, 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 blah. But really kind of started learning all those things that you only learn by doing in venture, and worked, there for a bunch of years. I worked at a multi-stage firm called Canaan. I started a firm called Village Global with a bunch of famous people like Zuck and Bezos and Bob Iger and Reid Hoffman, with some wonderful partners, and then started and run XYZ now. So
Awesome. Amazing background. It's amazing background.
yeah,
Yeah, I spent most of the '90s in Silicon Valley myself, so I had my runs.com. So I definitely know many of the names that you mentioned. So we'll talk about XYZ. Talk about the fund thesis. Talk about who you're investing in, how you're investing, and the like.
yeah. Maybe it's interesting to comment first on how we started, because when you start a fund, and Scott, you know this, maybe your majority of the audience here does as well. Venture, in my view, is just all the work. It's just the execution, finding the people, investing in those right folks, dollar concentrating, all that hard stuff. Raising a first fund, in my view, is you have to have just a shtick, a thing you believe that other people are going to lean into. In fact, if you go back and look at many, many, many modern firms, like Spark and others, they actually have that. They have this. They raised on some idea. So the thing that I believed in 2017, that the secret that I knew, was that I knew that people coming out of this big data company, Palantir, were very special. Now, Palantir right now, super well known, $400 billion. Everybody keep buying your stock. Don't worry about it. We're good. Just keep buying. Yeah. But when I originally got involved with Palantir, because I introduced the first employee who's to work for me to the second, and I just dumb luck. They had questions. I loved working with them. I was drawn to the culture, and I ended up as an advisor, an early investor. And as a result of that, 2017, so we're years into Palantir, but I knew it was full of all these incredible people, which we can talk about. And so that was the founding premise. So I raised money based on that idea, which was hard as hell. And to go back then to, well, what do we do now? So the founding premise was that network. And it was mostly enterprise software and fintech. So if we roll it all the way forward, we've raised, over $1.5 billion now, including our current funds. And we still spend a tremendous time on that Palantir ecosystem and other ecosystems now, including our own network of networks. And we do mostly stuff in the public sector, so in the government space. So we were Anduril's first investor, Cape's investor, Turbine One's first investor, Apex Space's first investor, and all of those companies, Anduril, maybe the largest or best known, but those companies are doing very well, tens to hundreds of millions of dollars in contracts, all selling to the government. So it's an area we really like. Then enterprise software, which is anti-fraud systems like Sardine. And then lastly, for me, it's kind of other. I think everybody has this other where you're looking for your contrarian things. And some of them are like brand new hologram companies, fully crazy. Some of those others are like a Medicare broker, that we did when it was just getting started. And it's now we're the largest shareholder. It's the fastest growing Medicare brokerage in the US. So I would say it's like government, enterprise, and sort of other, especially fintech related.
So at what point obviously you've been involved in a lot of companies, a lot of success stories. What stage you typically in? Where are you in the life cycle of the company when you invest?
That's so we have over 120 companies, the portfolio, almost all of them. We were the first check and we led that first round of investment. Maybe there's like a seed versus pre-seed argument, whatever. So we'll write a check anywhere from say $1 million to, in this market, 10 million. And we would lead those early rounds. And the theory, there's a belief below that. The belief is that I love the early building. And then I love when you have a depth of understanding of both the founder and the business. So you can just aggressively dollar concentrate into those businesses because you understand the secret about them. And there are two parts to that. And you know this well. One secret is that you both have a unique understanding of the business, what's working, what's not, the people, all the sort of warts and challenges. The other theory that I've got for dollar concentration is that if you can be brave, it's a big if, you can see that you've got those two data points that say the go-to-market is just starting to accelerate. And the reason this matters is particularly this very energetic market, but maybe in all markets, price is growing faster than risk is getting mitigated. So if you can invest today and lead a concentrate capital by leading an A or leading a Series B, if you can do that 3 months before the company otherwise would, even if you're paying a healthy price, it's a better investment, and then you can ultimately drive just more returns, and also frankly lets you be a more intimate partner to the founder, not just to the capital, because you're looking at it, not saying like I believe in this business. Here's the thing to do. Let's go faster. So that's the so we come in very, very early, and then just the whole time through we try and be a partner and thinking about the capital, and then concentrating capital in where we can.
So maybe I'll pose three things to you. One, team, the market, and the technology. Which, in your case, at your stage of investing, is the most important?
Can I maybe change the question slightly,
Sure.
if it's okay? So I'm going to use I stole this from somebody, but can't remember who, which is there's an old rubric of like the surfer, the surfboard, and the wave, right?
Mm-hmm. Uh-huh.
And so the founders are surfer, the company and the product, my reframing, and the product are the surfboard, and then the wave is the market.
Sure.
So the thing that is now most important to me has shifted over time. It's the market, and specifically, is the market moving in your direction? Is it pushing you?
Mm-hmm.
And there's a lot of work to do that. Similar, let's overuse the metaphor. Did you get to the right place in the wave? Did you go blah, 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 blah? But if there's no goddamn wave, that coming never going to work. It's just going to be the hardest grind ever. And you're going to exit for small dollars. Cause we've all been in these companies, you're just killing yourself to get to something that's, that there's no support for. There's no, or not that push. So that's the biggest thing. So when we do our initial investments, we're predicting, we think the market's going to start pushing this.
Okay.
And so every step along the way, that's the question we're asking is the market now pushing this? Now, the execution below that is like, did you figure out the right product? Did you build and iterate quickly? Did you figure out a go-to-market motion to capture it? But this awareness of the market related, but independent of your amount of effort, is the big higher bet. And the reason I just spent a second on that is because it changed. It used to be, I just believed execution was the answer. If you just run faster than all the other sons of bitches, you win. And now I've changed it where the execution is necessary, but the market is the thing that is the most present in our initial underwrite all the way up through any kind of late stage underwrites. And we've been really fortunate where the market really comes in, like Anduril is an easy example of where that happened. And you can see it through all the defense procurement stuff now, but there were earlier indicators of that shift. And that's the stuff that we're looking for constantly.
So let's talk about the wave that is AI. So how is that impacting what you're investing in and how you're investing in?
Yeah. So we're going to keep abusing our metaphor. I think AI is not a wave. I think AI is the tide. That is, it is pulling all the boats up, and it's going to go down a bit, and they're going to go back up. And we see this from the fact it's ever present, right? It's in every company in some way, whether it's helping you work through small business KYC, payment processing, or whether it's, core and you're doing a new foundational model. AI is everywhere. So the assumption I've got is it's being used everywhere, and you're trying to figure out, like, does it matter? Is the thing that you're doing a differentiation? Because right now, for me, I have two big challenges, and they are really big for me. Number one is just everything sounds the same. Stop. I'm super goddamn smart. I was really on to the fact there was going to be a new AI-powered ServiceNow. We know the ServiceNow folks real well, love them, but we saw opportunities. And you know what? There's 7 companies that have all gotten backed doing the exact same thing. And 1 or 2 of them is going to win because, life, but all of them are just like scrapping to like compete with each other right now. And so that's a real challenge in the market. It's not lack of great people, not lack of great idea, but what are we mostly doing? We're mostly not doing those things. We're like looking for find something else. The second thing, by the way, that I'm struggling with is way back in the start of my career. So I worked at Netscape. Hard for people to imagine, maybe beyond you and I. Netscape, way back when, was building the entire internet. It really was. And so there was the calendar server team was to my left. The LDAP Active Directory team was to my right. The proxy server team was down the hall. We didn't even realize the proxy server team mattered. I think Netscape sold it. That was the beginning of like a multi-billion-dollar CDN business. You couldn't tell what were the parts of and that calendar server team my friend Rob worked on didn't matter at all. There's no big calendar server business. Not a thing. I think we're in the same. No, I know we're in the same part of AI where you just don't know exactly where are the places that are going to be defensible, where are the places that are going to be valuable, vis-a-vis the existing open source systems and players. I think so. Therefore, it's very difficult to choose not what needs to be done, but what's going to be an independent business. And so those are the things that we struggle with. Therefore, the stuff that we do tends to be either where AI is clearly eating fixed costs, like BPO, like business outsource dollars.
Right.
So,
Right.
or something kind of crazy, and crazy comes in all kinds of flavors and colors, but it's really not intuitive. Where we think a category is going to get changed because of AI. The Medicare brokerage is a great example of this. Just the stuff we've been able to do there has been different than what's ever been possible before.
You started to answer this question, but I'm going to continue on this trend. Obviously, we were both there during the dot-com boom, and now we're still around for what is now an AI boom. What do you see as the similarities during that time in the 90s and today, good and bad?
The first that I see is I already mentioned the unknown of like, what is the, I'm going to phrase this slightly differently. What are the physics going to be post-internet? What are the physics going to be post-AI? Like, what's going to be easy? What's going to be hard? Whereas, like, this is how my brain functions. Is like, how you can now see post-internet that a Shopify was going to work because e-commerce moved online, more businesses be enabled. If you're really, really savvy, when Stripe was just starting, you could see not just like the internet was booming, but you could see that point of sale payment systems used to be really expensive to roll out because you used to have to go door to door and sell a piece of hardware. They did credit card processing to the local shop. Well, now if you could realize that payments still very hard, but I can just do a digital distribution, people integrate my API. Therefore, a category that used to be shitty, this payment processing, could now be very lucrative because of the cost of adoption. So that's what I mean. Like the physics are really unclear. So that's, I think, exciting, but weird right now. The second thing, good and bad, is I think it's become so much easier to stand up businesses. We've all seen this. Some of those businesses run to revenue really quickly. The thing we talk about right now, I think all of us talk about, is defensibility. I think the same thing. So the excitement is it's so much easier to build companies. Are they defensible?
Right.
There's going to be so in the internet days, it was the same thing. So much easier to build. Hey, I got my website. I'm whatever it is, my thing I'm doing. There, it was like those things just didn't matter. There was tons of companies that like didn't really. I don't know whether they're not defensible, but they weren't really. There wasn't a fundamental need. Companies didn't necessarily need them. And the world that we're living in is similar, by the way. Where I went to a Christmas party the other day, and it reminded me of a party in the dot-com days because the food was delicious. Everybody was looking all fancy. I was lucky to get an invite. I was like eating like a piece of sushi going, what's this company do again? Do you remember those days?
Oh, yeah, absolutely remember those days.
Yeah.
Absolutely.
Yeah. So I think I guess I would say it's exciting because you can build so quickly and it feels very economically sloppy, which isn't good or bad. It's just interesting. So,
Okay.
and then there's devils and details, this stuff like the same way we saw Exodus. No one remember Exodus was a company that went way up to 30 billion back when 30 billion was a big number as a public company. They made data centers. You know what happened to them when .com corrected back? They went away. All those data centers got bought for mouse nuts by distressed debt people, and then that became a business later. Same thing's going to happen right now with data centers for sure. Like just for sure. You can look at all the math of it for sure. But there are going to be some victors out of some victors in there. They're just different parts of it getting overbuilt.
So you have a long list of great success stories. If you can, maybe maybe there's some future success stories you can give us a little insight on. What's in the portfolio that is unknown or lesser known, but has it could be really big.
Yeah, maybe I'll pick a couple. One, we're investors in a company called Cape. Cape is what's called an MVNO, mobile virtual network operator. Okay, completely forget that. What they are is they're a cellular provider, the same way that you have Verizon or AT&T. Literally, it's on my phone. I have a Cape phone, and it's a completely secure cellular provider. Means your SIM card can't get stolen. Means I can't see where you are. Like I can't be tracked, and a whole bunch of other activities that matter a lot. And these matter for primarily for governments, care a lot about them. Enterprises care a lot about them. Some consumers care about this. Probably the same people that are using Signal or DuckDuckGo or Proxymail or Proton, Proton Mail. And more people over time, as they care about privacy, make Cape a really important company. And so that's been a very exciting business to build. It's been very exciting to watch it sell to the government and then expand that to consumer offering and enterprise offering. So I think I love that company because it's novel, very unique, very, very hard to build. And it's something that it has all that market pull that we were just talking about. So it makes it an exciting one to be part of. I'll give you a second one that I'm really excited about and sort of this mid stage, just because is we did a company called Oro Labs. Oro is the ex Ariba team, and Ariba and Coupa
Mm-hmm.
are procurement systems. So these are systems that are used to do all the purchasing for large enterprises.
Mhm.
Coupa got taken out for I can't remember 7-8 billion, something like that in PE, and Ariba is owned by SAP, big businesses. So this team built a new procurement system, and they sell to really large Fortune 100 companies. And that's great. It's good business. The thing that I want to talk about that is interesting for Oro is once you're sitting on top of that system of record, what you can do for, say, largest financial firm in the world,
Mhm.
you can go, those people pay somebody to go look at all their invoices. They pay them like 30 million bucks a year. You're paying a service provider.
Right.
Well, now I can use AI to do the same thing to go review all my contracts and make sure they can conform correctly. And you're going to pay Oro a couple million bucks. You should probably pay us 10, but you're going to pay us 3. Fine. But we're going to eat that 30 million. And you're going to repeat that process being BPO dollars. So I think those are really exciting businesses. And then lastly, we got some new ones here coming along, again, like weird areas. So we built a company called Cabela. Cabela builds a product that helps people do supply chain procurement. So this is an example of I want to make that shirt you're wearing. I want to make that glass for that plant in your background. I want to make a yoga mat, all the way up to I want to make a new uniform for my wife who's a nurse midwife. And they go through the process of reaching out to all those providers, getting quotes, going back and forth. Something that normally you're WhatsApping, usually in 3 different languages with a bunch of different suppliers, and you're not getting the best price, you're not getting the best vendor, you're not getting the thing on time. So Cabela automates all that process and makes it super fast to do that procurement. They save people a lot of money. So that's been an exciting new business to go out and build that we've started. And I think one other early one, my partner Chauncey did a company called Ranger. Ranger is basically a AI for QA testing. So pick a large app, say one made by OpenAI, just the QA testing that verifies that thing works and works correctly all the time. So again, these are very early companies, similar thing where they just get this wave behind them, which then their great execution is causing that company to dramatically accelerate. So, and this is the kind of stuff you can hear here. It's the same. We like stuff that's in the public sector,
Mhm.
like stuff in the enterprise space, like Oro and Ranger and testing. And then we're also just like a bunch of weird stuff that I won't even bore you with, but they're just absolutely bizarre companies and big markets. And if they work, they'll be the next Android. They'll be oh my God, everybody should be doing whatever holographic events businesses.
That's awesome. So, talk about who invests along with you. Who are investors in the fund? Who do you co-invest with?
The co-investment thing, by the way, is so fascinating because, like, we do a lot with Sequoia, we do a lot with General Catalyst, we do a lot on the earlier side with like Amplify and First Round, and then weirdly, We do almost nothing with Uncork, even though I love, the team over there. We do almost nothing with Excel and NEA, even though I love those teams. It's weird. So you have these different categories of people. So those tend to be the folks that we're doing the most with to date right now is, the General Catalyst, Sequoias, Founders Fund, really, really similar mentality. We like those guys a lot for their, hey, we're going to think different and concentrate capital. Folks like that.
Okay.
Yeah, and then on the LP side, which I think you're asking about as well, in many ways, really fortunate because of the public sector work we've done, the selections we've done. We've got very strong returns, but DPI is still a distant vision. But it's been really fun to build as we've gone, building, building funds over the years. It's all institutional, almost all endowments, and then we're trying to spend more time with foundations and other groups. Really interestingly, Scott, for us, we feel I feel pressure every day. It's kind of like I'm sure you're the same way. It's like the sales guy. It's like, yeah, don't tell me about Andrew. Tell me about the new thing you've done.
Right.
And one of the things that we've been doing a lot right now is talking to foundations and other groups because we're just trying to feel good that if we can continue to be successful, we can just be doing things that get capital back into the missions that matter the most in the world. So we're lucky to get to do that on behalf of a bunch of schools, some fund to funds that really support some great groups and trying to find more of those folks where it makes sense.
That's fantastic. But for those groups and other that are listening today, why XYZ Ventures? Why now?
It's funny, actually, I'll give you the honest answer was when I was first starting the fund, I struggled with this. I struggled with it because I didn't just want to be another banker. I didn't want to be someone that just got to the deal first.
Right.
And so my answer for our investors is actually the same one that we give the founders, and this is where it shows up as an advantage, is that we are really we are intimate to our companies, and we are phenomenal at helping them raise their next round of funding. In fact, it's our only job. But what that means is that company always understands their business better. Kate better understands their telco universe better. But we understand the venture business. So who's going to be the next investor? What's the story you need to tell them? But also, it's today. What are the facts we need a year and a half from now so people see that our thing is differentiated? And that's the work that we've done that makes us successful. So therefore, we're really good at public sector go-to-market. And it means we can uniquely do some stuff there. My partner, Art, used to run AI infrastructure at Apple. So we've seen stuff at AI scale. So we're going after stuff, FOMO and humanness aside, we're really looking at stuff in a pretty deep way of saying, can this company actually exist differentiated against open source solutions? And that's really the kind of nuts and bolts work that we do. And what we see from our investors, the reason that they invest is because they talk to the founders and they really are like, oh, this is a transformative partner in a way that sometimes just surprises me. But that's what it mostly is. Some folks also are really trying to get exposure to the public sector where we spend so much time. And I think that's probably the other place. I'm nervous about people that only do public sector stuff because I think the category is starting to get overinvested. I think there's a lot of things that are going to end up as Androl's money, not some other company's money. But, it's a journey.
So anything else you want to share with our listeners today?
Mostly that I'm so excited that we've been able to build at XYZ. And I was going to say a funny thing, especially because you got a lot of LPs and asset allocators in the audience. I'm going to say an unexpected joy that I've got is a lot of my LPs are people that took a risk on me early and as now working. I think we're moving from emerging to emerged manager.
Okay.
One of the things that's been really fun, by the way, Scott, I'm not sure that's good. When you emerge, people are like, well, yeah, it's no longer speculative. It's like, well, do I want benchmark or do I want XYZ? And look at the math between the two. It's like, it's still been no joke comparison. But it's been a joy to get to build with those LPs. And some of them have been in one place and they're building up their own AUM and their career. And some have moved from one school to the next. And that's been a real joy as well. And I just mentioned that to say, we don't talk a lot about that part of the relationship because there can be tension for people. But I'd say I've come to really enjoy, and I was not good at it when we started, and now it's been a real, it's one of my favorite parts of the job now is talking to people about what they're trying to do on the asset allocation side and, you know, where and why us. So I think that's probably the same draw you have, which is like understanding the full ecosystem,
Right.
has been exciting.
Absolutely. Absolutely. Yeah. It's never a dull moment, never an uncrazy day. So I definitely can empathize with that. So where can people learn more about XYZ, learn more about you, and get in touch with you in the firm?
Yeah, the easiest way is just to email me. So it's my last name, Fubini, Fubini at xyz.bc. That's easiest. Obviously you can do yourself. The website, you can get me on LinkedIn, but those are probably the two best ways to get me.
Fantastic. Well, Ross, thanks for being on the show. For everyone listening, I encourage you to like, comment, follow, and share this post and everything else that we're doing at Emerging Managers. And again, Ross, thanks for being on the show today.
Scott, appreciate it so much. Thanks for having me.
My pleasure. Welcome back. When we're talking to our friends, XYZ VC, Fabio mentioned the market or the wave as the most important factor for success, even more so than execution. But we should be aware that in the current AI environment, many companies are building similar services, leading to a competitive scrapping of market share. Finding ways to differentiating or focusing on where I can clearly reduce fixed cost is what he sees the key as creating an independent, defensible to business. At XYZ Ventures, they're focused on being an intimate partner that help companies raise the next round of funding by understanding both the company's mission and the venture ecosystem. And again, stressing the metaphor of the surfer, the wave, and the tide. So again, I encourage you to deep dive into this metaphor and the investment thesis that XYZ Ventures is pursuing. And also, I encourage you to follow, like, comment, and share this podcast with all your investor friends. And again, my name is Scott Kelly. I'm your host, and I'll see you next time on the Emerging Managers Podcast.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.